Okay, most students want to know what's on the final, and I don't blame you. I will have some announcements about the final exam very, very soon for you, but it's very likely that it's going to be online if I can get it to work properly. Okay, so here's some concepts, right? We understand the very first lecture we went over business one. You got to know a lot of that business one stuff just to understand the business two stuff. We went very thoroughly over chapters 7 and 8 on the first exam, and the receivables and bad debt. You especially have got to know the indirect allowance method. There were three main methods. Okay, I believe the balance sheet method, the percent of credit sales method, and of course the aging schedule. All right, you've got to know how to do bad debt write-offs, and you've really got to understand this mechanism for how allowance for doubtful accounts works with the accounts receivable account. Okay, with long-term assets depreciation, there's three main methods. Of course, straight line, the most common and easiest, I think. The units of production method, and the double declining balance method. There are other methods that you should be aware of if you go into business three and other financial fields. There are other ways that companies do it. We just don't cover them in this class. Okay, but you will learn those if you become an accountant and work for a large company. Got to know the journal entries that go with depreciation expenses and the contra accounts, right? Both ADA or contra accounts, and so as accumulated depreciation. Partial year depreciation. We don't buy things only on January 1st like your accounting book often says. You've got to know how to deal with partial year or even partial month depreciation. Got to know how to make those adjustments, how to account for betterments when you improve the capacity or the value of the machine, and of course extraordinary repairs. Remember that they extend the life of the machine or the asset. Natural resource depletion, very much like units of production method for depreciation, but very different, okay? And then amortization of intangibles. We talked about patents, goodwill, copyrights, very important and often misunderstood because of its intangible nature. Just because it's intangible makes it a little bit hard for some people to visualize or to understand. So you've got to understand them so you can add value to your company, because a lot of others won't. Okay. Second exam, we covered chapters 9 and I believe Appendix B, along with bonds. So these three areas, chapters 9 and 10 plus the appendix, covered accounts payable, sales tax payable, short-term notes payable. I think we did okay on that. Warranty liabilities or contingent liabilities, and as well as payroll taxes. Something that's very important if you work in payroll or work in personnel. Got to get those right, and you got to understand where they come from. And a lot of people are not aware that companies pay exactly the same fees that you pay for Social Security and for FICA. I think that's the same thing. But anyway, what you pay out of your check, out of your own pocket, the employer has to match that too. Okay, so be aware of those. All right. Net present value. We should know present value of an amount, present value of an annuity. You should generally understand how this future value stuff works, although this won't be on the final. Okay, so maybe I should have left it off this list, but you should clearly understand these first two very, very well. Okay, future value has a value for you if you're planning to save for retirement, planning to save for some big investment down the road, but the test will emphasize mostly the present values of an amount in the annuity. So you should understand tables B1 and B3 in that appendix. For bonds, of course, you got to know journal entries at bond issuance and at bond maturity. You got to know how to do journal entries for the interest payments. Bond issued at discount and premium. You have to know that. And the way to calculate those is you got to calculate the net present value of interest payment cash flows. That would be an annuity that you get as the investor. And of course, you get the net present value of the payback of principal as well. You got to bring that back to today. The sum of these two gives you the total net present value of the bond, which is equal to the cash collected at issuance. One thing that's not on my list here is the amortization of a bond discount or premium. So go back over that. It was one of the last lectures in chapter 10. Make sure you understand that. People didn't do so well on the test on that one. Make sure you understand that. That could show up on your final. Okay. And of course, the final exam will have a disproportionate amount on this. I'm going to make a correction here. Chapter 12 is not on your final. Okay. Be aware of that. We didn't cover it in this class. Okay, and that is in the fall of 2012. Other classes who hear this lecture in the future, you probably did have chapter 12. Fall of 2012, for the December 2012 final, you won't have chapter 12. Okay, corporate stock. We issued stock. We did treasury stock buybacks. Had to know what par value meant and what paid in capital meant. You had to know how treasury stock affected the paid in capital account. Dividends. We did quite a bit on preferred dividends versus common stock dividends and whether or not those preferred dividends were cum or non-cum. Okay, so a lot of stuff we did in recent weeks covers this. You need to know how to do that. Again, skipping chapter 12. Financial analysis was just this latest chapter, horizontal, vertical, and common size analysis. You had to understand these ratios. The main ratios you need to understand are debt ratio, accounts receivable turnover, and inventory turnover. The ratios we just covered here in chapter 13B, as I call it, those are not as important as these ones, but you should still know them, of course. Inventory turnover, or ITO, ARTO, debt ratio, and of course earnings per share and price to earnings ratios. Got to understand all that. Okay, there were 3 case studies we covered: the Farmore accounting fraud, secret history of the credit card, and the crash of '98. You've got to understand those to do well in the final. Okay, so there'll be more on the final coming up very soon here. Check your announcements and be aware of that. But that's how that works. All right, good luck, and I hope you've enjoyed the class. And even though I met most of you at the exam, didn't meet all of you, I hope you've had your goals met with this course. I've really enjoyed teaching it to you, even though I didn't get to talk to you much in an online class. But I hope this format worked for you, and I hope it met your goals. Okay, best wishes to all of you as you go on, and of course, best wishes on the final exam. Take care.